Good morning, good afternoon, good evening, good night from wherever you're watching me, my friends. So today I'm going to do a quick analysis of two pairs, only one pair. First of all, I'm going to do an analysis of the US dollar, the US DOW. So we will quickly just do a top-down analysis from the monthly, or let me just begin from where I had done analysis last week, then I'll just clear it and start afresh. So this is on a 4-hour time frame. Let me drop down to maybe 1 hour time frame. Yeah, let's start from a 1 hour time frame. So this is a 1 hour time frame. So last week, um, the US dollar, uh, we had this trend line that we were using to guide us, and what the US what that means is that price has been respecting this trend line. It has respected it once here. It tried to reach the trend line, but it didn't. It went back, and sometimes last month around 30th of November, it hit the trend line and reverted, and then last week on the 7th of December, it hit the trend line, it reverted, hit the trend line again, it has reverted. But one thing that you should agree with me that the more price hits the trend line, the weaker the price action becomes. Because look, this was the first move, it retreated all the way up to here, tried to come back, went up to here, retreated again down here, went back, and now, as you can see, it's struggling, like it's going, but it's not moving much further and coming back. And when we ended the week, there was this one big move. I think I remember trading this move was, I think, on Friday. And as we finished the US session, that was Friday. But today, on Monday, no, this was Friday, or this one up. So this was Friday 10th. When we finished, there's a very huge gap that the market did. So we have this huge gap that the market left behind. So this is what we call the market gap. So just call market imbalance. So this is what price left behind. And as we speak right now, price has broken structure, tried to retrace and continue going upwards. I'm not sure whether we're going now, the bulls are going to take over the market, or we're still trading going downwards. What the best thing to do is just to wait for this day to end Monday, because the market is still consolidating, and see what will happen on Tuesday. Because if you remember, the last high what the market made when it was going down was on the 7th December, and price hit this level here, which is around 104. That's around 105.50 level. So just reduce that and put here, this is the liquidity zone. So there's a liquidity zone here that happened when price hit here on Friday. So what is going to happen in the market this week? Will you be seeing price going all the way to fill up this liquidity that it has left around 105, or will price just hit around this region? Because this is the last region, um, immediately last region that price went up to 104.90, and we're already seeing that the bulls tried to take over the market, and now the market is still in consolidation because we are still in Tokyo session. So for me, I'll be looking at these two areas. One, there's this area that will be covered, and the market is so funny, it can decide to cover this area just with one huge candle, or it can decide to move the way the market moves, like it will come here, hit here slowly, go back, come back, hit, come back, So I'll first wait until this market imbalance is covered, then I start looking for moves. So the moves can be either way. It can be all the way upwards, or the move can be downwards up to this other imbalance that is here. So I'll just keep a close eye on the market and see what the market does. But as for now, let's just follow price action, because this liquidity zone that was there last week had already been has already been cleared. So the only other liquidity zone that hasn't been cleared, if I can clone this, the only other liquidity zone that hasn't been cleared is that. So that's that liquidity here, and then there's still some liquidity around here. Um, if I was to clone that again, so these are the three liquidity areas that the market, that if you're looking at the US dollar, that the market will be looking at. So one, there's a market gap downwards, and two, we have these three liquidity areas that the market will be looking to come and clear. If the market then goes above here, then it will be looking at it to come and clear all these stop losses that are on top. So that's number one on the USD DOW. You can still look for other opportunities down as we move to lower time frames. So let me just clear all this, because all these regions have already been corrected. And if you are looking at the downside, we have this area here. There's liquidity there, and then there's another liquidity zone around here. So if whatever way the market moves, if it goes up, we already have what are the areas that you should be looking at. Yeah, the same areas you can put your stop loss, or you can enter the market. And if the market is going down, so these are the areas that the market is going to be looking at. Number two, as we all know that the US dollar moves opposite way with gold. So if the US dollar is going to be into a buy, then we are looking at selling gold in London and New York session. But if the US dollar will be going down and the buyers have the market, then we'll be looking at buying buying gold in London and New York session. So for me, that's what I'll be looking at this week on the US dollar. Now, coming back to the US30, US30, I've always said it trades the same way. It trades the same way as it trades opposite, same as US card. But if you're looking at a US30, and then on let me just start on a 4-hour time frame. We'll do a top-down analysis on a 4-hour time frame where the market is. This has been an area that has been used as a support level, where the price is at the moment. Let's say support and resistance, because look, price has been bouncing off this area. Once, twice, three times, almost there 4 times, 6 times. It has also been used as an almost, you can say it, an almost a support level. I don't know how the market has behaved. Yes, if you move back in August 2022, the market used this same area as an area of resistance. If you move back all the way again, same area. So this level is very crucial where price is at the moment. That it's an area that has been used as a tested support and resistance zone. So I'll just label that. Let me see. Where is that? Where is the leveling tool? I'll just label that as a tested support and resistance zone. So, tested support and resistance zone. So where price is at the moment, this is the tested support and resistance. So now we're on a 4-hour time frame. One thing you should also notice, that if you're on a 4-hour time frame, what price has been doing is between this region and around here, price has been ranging, which means price is just moving horizontally. Price ranging. So around this region, let me just reduce the opacity. There you go. So around this region, you notice one thing, that price has been ranging. It hits up, comes back, or it disappears in the middle. If we measure how many pips are there from here to there, that is almost 1,000 pips. So that's a good area to trade now. You just have to be very careful if you are, because price is here. We don't know whether price is going to go upwards or price is going to go downward, because from here price can either go that way or price can decide to come down. So we're not just sure what price is going to do when it leaves this level, because at the moment we start getting liquidity and volume from London and the New York sessions, we'll be looking at carefully to see how price will be behaving. But one important thing also to note is you have to note this area. This was the last area to be used as support. Last area to be used as support. You can as well call it, if you want, you can as well call this area as liquidity zone. Why do I say liquidity zone? Because those people who got into this buy move, they left their stop losses here. So if the market is coming down, this will be a very important area that the market will be looking to take out. So I'll just label this liquidity zone. Then number two, there's also another area here which you can as well. So this is, we call this a demand zone, because this was the last candle before price started moving opposite direction. So I'll call it, this was a fresh demand zone. So you see, there's a red, there's a buy, then a few, there's a sell, then a few buys. So this is the last candle that price bought before it started going upwards. So these are two areas that if you're looking at the US30, that you should be carefully looking at. So look at the liquidity zone and the last support, and then this was the demand zone. And then number three, there's also a gap that has not been filled. This price tried to fill this gap, but between this area and that area, that's a very huge market imbalance area. So for the US30, those are like four things that we're supposed to look at. So I'll try just to number them. So there's number one, numero uno, give it a bigger font. So there's number one is this, that price is consolidation. By price meaning it's in consolidation, it means you can't tell whether buyers are controlling the market or it's the sellers are controlling the market, because price is dancing within a range of 1,000 pips. So it goes up, it comes down. So number two, we have this area, liquidity. So this is the area of liquidity that should price come down. This is an area of liquidity. Then number three, we have this market gap that the market has left when the market left when it was going up, and this is all of it is on a 4-hour time frame. And then number four, we have the demand zone. Number four, we have the demand zone. So these are very crucial areas that you should look at and follow price action to see what will happen, because the market can decide to come for any of this. It can decide to come for the liquidity here, because the market right now is on a downward trend, or it can decide to come for this market gap, or it can decide to come and touch the demand zone, because this demand zone is not tested. It's still a fresh demand zone. Price has not come back to this area. And at times, in most cases, if it's a demand zone or a supply zone, it means price will hit that area and revert or continue going downward. So for me, those are the important things that I look at on a 4-hour time frame. But if you break it down now to lower time frames and you start looking for small opportunities, so like for example, if on a 2-hour time frame, you'll notice that this area is an area of liquidity. So let's name it as break of structure. Then you'll also notice the price left a market gap here. This is now on a 2-hour time frame. And these are the immediate places. Like if you have to trade, these are the immediate places. Another place will be here. There's liquidity, and then you'll notice that this place is the last candle that happened before price moved it down, and you're going to call this area of supply, because this is also this area of supply has not been tested. It's a green tested area. If you move down again to 1 hour time frame, now you can start seeing what I'm talking about clearly, because there's this market gap, and on 1 hour time frame, we see what the market is doing here. The market is trying, it's consolidating. So we don't know how long it will consolidate. We don't know after it has consolidated which move will it make. Will it go for this market imbalance, or as we saw it on a 4 hour time frame, it will come to clear this liquidity? Yeah. Moving up to the 30 minutes time frame, the same thing. There's that huge gap, and the price right now is consolidating. So we're just waiting and waiting and waiting, because in trading, one thing we're sure about is patience. Patience pays. So we wait and wait and wait and wait, especially for the volume and volume during London and New York session. So that's it for me. And just in case of anything, drop a question in the comment. And I wish you a happy trading week. Ciao, Bella, ciao.